So you finally got approved for that dream apartment? Congrats! But hold on, there's one more hurdle, the credit check. Maybe your credit score isn't the highest, or maybe you're new to building credit altogether. Fear not, my friends, because that's where financial tools like KOHO come in. But the question is, does KOHO actually affect your credit? Let's dive in and unpack the truth behind the KOHO magic. Before we delve into KOHO specifically, let's take a quick credit crash course. Your credit score is basically a report card that lenders use to assess your trustworthiness when it comes to borrowing money. The higher the score, the better your chances of getting approved for loans, credit cards, and even renting an apartment. So, how do you build a good credit score? There are a few key factors. Payment history, this is the big kahuna, making up a whopping 35% of your score. Making on-time payments for things like bills and credit cards shows you're a responsible borrower. Credit utilization ratio, this fancy term basically refers to how much credit you're using compared to your total limit. Keeping this ratio low, ideally below 30%, demonstrates you're not living paycheck to paycheck and reliant on credit. Credit mix, having a healthy mix of credit products, like a credit card and a loan, can also boost your score. This shows you can handle different types of credit responsibly. Now, KOHO steps into the scene. It's a prepaid MasterCard that lets you spend the money you load onto it. Think of it as a debit card with some extra features. Here's the standard deal, using a prepaid card typically doesn't affect your credit score because you're not borrowing money, you're just using your own funds. However, KOHO offers an optional credit building feature. This is where things get interesting. When you sign up for this feature, KOHO performs a soft credit check, which doesn't hurt your score, and then reports a small, secured line of credit to the credit bureaus. You make monthly payments towards this credit line, just like you would a regular loan. If you keep up with these payments, KOHO reports your positive payment history, which can help build your credit score over time. KOHO, the pros and cons of credit building. So, is KOHO the ultimate credit building tool? Let's weigh the pros and cons. Pros. Soft credit check, no hard inquiries that can ding your score. Secured line of credit, less risky than traditional credit cards as you can't overspend. Building blocks for good credit, consistent on-time payments can boost your score. Budgeting tools, KOHO's app comes with features to help you manage your finances effectively. Cons. Limited impact, the credit line offered by KOHO is typically small, so the score increase might be gradual. Monthly fee, there's a fee associated with the credit building feature. Not a magic bullet, building good credit takes time and consistent responsible financial behavior. Is it right for you? Ultimately, whether KOHO is a good fit for you depends on your individual credit situation and goals. Here's a quick guide. New to credit, if you have no credit history, KOHO can be a good starting point to establish a positive payment track record. Rebuilding credit, KOHO can be a helpful tool if you're working on improving a damaged credit score. Solid credit score, if you already have a good score, KOHO might not be necessary. There are other ways to maintain a healthy credit history, like using a credit card responsibly. KOHO can be a valuable tool for building or rebuilding your credit, but it's not a magic solution. Remember, responsible financial habits are key. Use KOHO alongside a budget plan and make sure you can consistently afford the monthly payments before opting into the credit building feature. With that said, thanks for watching and until next time.